What's up, guys? Welcome back to another live stream. This is David with Stock Talk with David. So let's just go ahead and jump into it. What a crazy week it has been. And so I want to go through, we'll talk about some updates on the week, some things to look forward to this coming week. And then really want to get into the MMAT, the metamaterials, get into the spin out, the oil co, and all that. So it's a lot to go over, but we'll make it pretty quick. So we'll jump right into it. Not really a whole lot of big news this week, but what we saw was a quick inversion of the 10-year curve. I don't know if I have that on here. Let's see. See if we can find the 10-year inversion. I don't know if CMAC will show it to us, but what we're going to find, though, is that the yield curve inverted. So basically, that's the number one indicator. It's the most accurate. It's always been accurate for a recession. So anytime that yield curve actually inverts, what happens is we have a recession that follows like 12 to 18 months later. So it did do that briefly, I think, on Tuesday. It got a little bit of news, but not a lot of people talked about it, which I found pretty interesting. Something that came out this week, the House passed the marijuana bill, meaning that it's going, I believe, now to the Senate. And so we'll see a lot of that. We'll see the pot stocks moving up. We'll see I think the ticker is YOLO, which is funny. This is the ETF, so we can see what the index was doing. Here we go. We'll go 1 month. Yeah, I mean, it definitely moved off of the news. I'm not sure if pot is somewhere that I would want to be investing in. I'm not quite sure. Spencer says we've got Tesla slight miss on delivery numbers. Yeah, I've been keeping up with Tesla. I know Spencer likes that one a lot, but we'll definitely look at that one. Did those come out on Friday or Thursday, Spencer? Those numbers. Yeah, so we can see that Tesla over the week, maybe a little bit down on the week, past 5 days or so. But they are announcing the dividend, I believe, as well. So that's going to be big news. Tesla having a dividend, being a insanely high market cap of a company, like $1 trillion. Like, wow, that is pretty insane to me. So it looks like Tesla might actually start being one of those stable companies, right? Like we'll see that companies issue dividends when they have pretty predictable revenue numbers, right? They're pretty stable, and they really want to attract investors long term, right? It's kind of the incentive that you would have to invest in them, right? Just a little cherry on top, so to speak. So I think that's going to be really interesting to see how Tesla does that with the oil crisis, the energy crisis. It's going to be a lithium crisis before long of all these renewable things. So best place to be, if you're going to play that angle, I would say is being the leaders, being the Teslas, right? Being the best lithium players. I know we talked about those guys about a month ago or so in the last live streams. So that was pretty interesting. Cool. And Spencer says that news came out on Saturday. Okay, cool. One that I really wanted to get a look at here is Facebook. We'll look at Facebook. Yeah, if you guys were with us mid-March, we actually picked up Facebook around this 190 area, and now it's currently around 225, 224. So if you guys were on that was a pretty good move. But when you think about it, just be realistic, right? Like, do you think that and as terrible as it is, a Ukraine-Russia war is going to affect the amount of times that people in America or around the world really get on their phone and they check their Facebook account, or they update, or they post a story, or they buy something from Marketplace? Not really. It doesn't really affect the business that much, right? So nothing actually changed in the business. We just saw, these big sell-offs, right? For no apparent reason. This segment is actually earnings, but we just see this, this continual grinding down lower post earnings. It has nothing to do with what's going on around the world. It has everything to do with the underlying business, right? So I think when we get away from all the noise, we just look at the facts, right? So if we just zoom out a little bit, I mean, that's awesome, right? We can find the best companies. We have confidence. We know nothing's changed in the underlying. Spencer's got all the Tesla news. Vote during annual meeting, October 7th. Yeah. And then I think there's someone else, Google as well. They're doing a big, massive split, and that's going to be coming out in June, I think, too. Cool. Yeah, so what we're going to do really quick is I'm going to go into the, let's see, is we're going to check out some of the weekly indexes, and then we're going to jump into the meta news as well. And this is a great website too to use, guys. This is stockcharts.com. They have all types of different charts you can look at. You can pull up different indexes, different stocks itself. The one that I like using is the candle glance. So I just go to predefined groups. I come down to S&P sector ETFs, and I can just see, what's going on in these stocks. I'm going to look at 2 months, and I get all the sectors, all the sectors from the S&P 500. So that's pretty cool. Yeah, so we see the S&P did a little bit of a pullback on the week. I think they did actually end slightly up, which is true. Discretionary up, communications looks like up a little bit, technology slightly down. Staples actually made a big comeback from that 71 to 76, and that's a slow-moving group, guys. So over 15 weeks, they made up about 5 points. That's a pretty, they're so low beta, they just don't move up that quick, so that's cool. Real estate got a little gap up and then looks like a stronger push. So it might be a pretty good week for real estate. Financials with the old curve turmoil, I would just stay out of the financials. Same thing with energy, materials, consolidating, industrials. I'm not a big fan of industrials right now. And healthcare, maybe on the healthcare, utilities. I think we called these out at 64. Now they're at 74, so that's good too. So yeah, guys, that's what I would look for. I would stick to the real estates. I would start looking at the communications, some of the technology. Yeah, that's how I would look at that. Cool. Great. So some of the things that we're going to be seeing this week is I think we're going to have some PMI numbers. We're going to have some other concrete things like that. We're going to have PMI around the world. We're going to have some bank meetings, things like that from Australia and India. I assume they're going to follow suit. They're going to raise rates. I think Chile raised rates pretty big, which was just funny, Let's see. Balance of trade. Get some inflation for Korea. Okay. U.S. balance of trade. So just a big macro week, really. 10 a.m. we get the PMI on Tuesday. And let's see. Wholesale inventories on Friday. So yeah, beginning of the month is a big macro period for the stock market, to say the least, right? Cool. All right, so let's get looking at MMAT. We'll look at the chart. And again, just this consolidation, right? We get this peak, we get these channels, we have a resistance around that $2 sign, $2 mark, and then we have a support around that 150, and it just goes back and forth, back and forth, back and forth, right? Not a whole lot to see there. MMTLP. So we see MMTLP, they do get a pretty big run up, and then they get these big pullbacks and the consolidations, right? I think this has everything to do, this is not even MMTLP. It might not pull up on here, or here we go. Okay, thanks for working with us. So we see, it's just this, it goes to $2 and it comes down to 1.5, then to 1.13, right? This really has to do with everyone assessing the fair value of the Oilco spinoff, right? So it turns out, and I'll pull up this. So we've known for a while that there's going to be a spin out, right? So what that means is that the dividend might not necessarily be like that cash payment we thought of about a year ago. It's actually going to be spun out into a new company. And what that new company is going to do is facilitate the sale of the oil, to my experience. And so if we check out the, if we think about it like this, like if they're creating a company, the company then is just going to basically be completely separated from Meta, right? So now Meta has nothing to do with it, might have some oversight, but very limited. And now it's completely Oilco's job, right? Completely Oilco's job to get the assets sold, to facilitate the sale. If they're going to do any oil operation, drilling, rigging, whatever, it's all their job. So it has nothing to do with Meta anymore, from my experience or from my interpretation, right? So they are, looks like they just got the audit. Series A's preferred shares will exchange their preferred shares pro rata for Oilco common shares. They are inherently time consuming, is what the former chairman of Torch says. Please, it's just a bunch of corporate BS, right? They've incurred cost of $14.2 million. The drilling activity to maintain compliance with the lease. Let's see what else we got. There can be no assurance that Oilco will be successful in necessary financing, or that expenses incurred to date will be repaid to Meta. So there's a chance it doesn't work. I think the market is definitely filtering that out. They're definitely assessing that. At this point, I think, and this is not financial advice, but what I am doing, I'm pretty sure what Spencer is doing, as well as one of our best guys in the group, is we're just holding on to those shares, and we're just going to let whatever happens, right? Basically, it's free money the way that we got them. We got them for holding Torch on the split. So we might as well just see what happens, right? Oil's at a pretty high price. So that will be, that'll be it. Spencer says they have to get financing set, which will be at the cost of MMTLP or Oilco, so that makes sense. And then my guy, NASCAR All Out, says, can you check out IVDA? It's a second day uplisting play. Let's see. I'm not sure what that is. What is that? Okay, so a little penny stock. Yeah, I'm not quite sure what this is. It looks like, definitely looks like some negative news. Are they getting delisted, or what's happening there? Let's see. Uplisting to NASDAQ and reverse stock split. Might be similar to those Torch situations, Spencer, if you're still on. Okay, so it looks like are they like a Medicare company? Intelligent Video, okay. I've never heard of this, so I'm kind of reading it as we're going through this live stream here, but I definitely want to figure this out. It looks like it might be an interesting play. One of those small things we might do. The shares can only be purchased together. Okay. We're gonna check the short interest on this, because that might be something. I'm going to look at the short interest, see what that is, because this is exactly what squeezed Torch to begin with. Actually, this is the best one. So to check the short interest, sometimes I'll use Cap IQ, but actually one of the better ones to use is going to be shortsqueeze.com. And they have some pretty cool metrics that you guys can use. Let's see. Okay, so barely any short interest for what this is showing, 0.1 days to cover, so there won't be any squeeze momentum like that. They had a 1-to-8 reverse split and got uplisted to the NASDAQ on Friday. Other uplistings have run day 2 pre-market this year, so you're probably expecting something then to pop off. And that makes sense, because I think it said it at 11% on the day. Is that what it said? 1.92, 33% down, yeah. I would definitely watch that, because you might get a good bounce. I would be careful, if you're overexposed in it, I would maybe, if you get some profit, take a little bit off, but if you have access to it, throw a little bit in, and if you get a big pump, trade up, move your stop loss up, and eventually your stop loss becomes higher than your average cost. And even if the trade starts to go against you, you still make, you still have a great profit, right? You still made money, which is the name of the game, right? You want to limit your losses and let the winners run. So we'll look more at this one though. Today announced the pricing of its underwriting. Okay, so it looks like it might run to like 4.25 because that's where the offering price is for the warrants. And they will expire 5 years from the date of the issuance. Okay. So yeah, you'll definitely get like a bump up, right? But yeah, I would definitely research it. We'll talk more about that in the Discord group too. Spencer says 5.05. This is not the best chart to use for this one. We'll go to TradingView. What else do you got, man? What else? Do you have any cool stocks? Look, that's a pretty interesting case. We made a lot of money from something like this last year, if you're new to the group. Well, yeah. Okay, we're really messing up this chart here. Yeah, in 2022, there have been 6 uplistings that have run over 100% day 2 pre-market, usually pump right as pre-market opens. Yeah, that's kind of the case with these small penny stocks, is they get a big bump as soon as trading hours start at 4 a.m. Yeah, this was like yesterday. So I'd be careful. This is some big action, from point there to there. So I think if you can get above 5, I think that this stock might actually have some good interest in it. That's what Spencer thinks too. So good thinking on that. And another one I want to look at, we've been talking about a lot, is CCI. This is Crown Castle. This is a good REIT that we like. I look at daily charts, so we'll look at the daily charts. Okay, so Crown Castle, what do? Well, in essence, they literally own the land where Verizon, Sprint, T-Mobile, AT&T, like all the internet, all the cell phone guys, all the communication companies, they literally own the land where their cell phone towers are on, right? And they can do the fiber optics cable underground. They own the rights to that. They own the rights to the 5G. They own all of that. And the companies, cell phone companies, will pay a fee to them, and they just make the money every single month, just like owning a rental property. And because it's a REIT, the money gets paid back to the investors of the real estate company that owns all that stuff. They get that paid back quarterly, which is pretty nice. Couple of things that we know is that real estate really tends to pop off. It's one of the best sectors to be in post rate hike announcement, and so are communications. Those are like the top 2. So you have those 2 things going for you all in one, which is great. I really like this. We called it around started talking about 175, 170, jumped in about 180. We're at 189. So we have an option structure on it. We're going to probably readjust the option structure for our VIP group. But the good news is no matter what, we're still making money. There's ways that we can make even more money if we just do the options trade a little bit better now that we're starting to hit this limit at 190. My man says ZTEK on 323 was the last to do it. We can check it out. And then Spencer has LLY. I think that's Eli. ZTEK. Yeah, looks like this might have been it right here, you're saying, on 323. Yeah, I can see it. Yeah, big pump up there, big gap up, right? Goes to $3, $3.78, comes back down. Makes sense, right? There's a lot of these, I don't want to say manipulation, but there's a lot of things that these companies will do to make the most money, kind of like an agency issue, right? Like they want the management to make money, but they want the shareholders to make money, but management wants to make the most money. So they'll do all these crazy things. The problem is you don't always have the most reliable information or the most timely information. So you think that you're trading something, and then the street's already been trading it for 30, 40 minutes before you even find out about it. So that's the thing, right? When we do these plays, we go at them to make money, but we definitely don't bet the entire portfolio. So I would just stress that. I think you did a good job finding it. So that's great. Spencer, LLY consolidation at all-time highs. Looks like a breakout similar to Costco. Oh, wow. Okay. My man says, doesn't really show up on the daily because it hit a high of 14.98 pre-market, but it opened at 3.7. Oh my gosh. Where did it open at the pre-market then? What was it, like $3 or something? That is insane. That's insane. Spencer, yeah, I see. Wow, okay. This is really solid action here from Eli. And this is what I really think is that biotech, these pharmaceutical companies, they're a great place to be in because they get overlooked the same as technology, right? When rates go up, technology gets overlooked for just a little bit. And then towards month 3, month 6, the money starts flowing right back into it because now investors understand the picture. They have more or less the confidence to estimate what they think the Fed is going to do, and they'll go out to tech because they want to make money. Kind of the same situation here. We got the same thing with biotech. Okay. So if that happens, Spencer, 300, what do you think, 320 maybe? Maybe a little 6.6% gain. Not much, but definitely a good run up, right? What are we looking at now? Costco. Spencer wants to compare this to Costco. Yeah, I mean, look, yeah, they did the same thing. The same exact thing. Look at that. Yeah, 571, 575, 580. Yeah. Looks like it might be, if you get a bump off of that 570 again, that 570 number, you're definitely in it. It'll start running again for sure. Okay. Yeah, so that makes sense, I think. Let's check out Alibaba. Yeah, this is pretty interesting. So we get this news here, literally right in here. China's uninvestable. Stay away from China. Boo China, right? And it comes all the way down to 75. And then the next day, China comes out and says, we're going to support capital markets. We're going to comply with the HFCA rule. We're going to do better accounting. We're going to buy back shares of our companies, right? They start making all these promises, which I think they actually have a strong incentive to uphold. Most people doubt it. I just don't see the picture in which China is in the position to play games with the U.S. anymore, even though we might have arguably weak leadership on the China front. They're just not in the position, right? They're watching what's happening with Russia. They can't afford to be sanctioned like that. So I think they're going to start wising up, right? It's going to be painful for China, but they're already in a big mess as it is with their economy. So just looks like consolidation. Every now and then you get this weird noise. Oh, China this, China that. The hit pieces are endless on Seeking Alpha. So just be careful what you guys are looking at. Know the value of what you have, right? Too many people know the price of everything and the value of nothing. Sucks for them, but we just have a good arbitrage situation then, because we can just take what they've discarded, their trash, and we actually know it's a treasure, and we make money from it, a year or 2 years later. Just patience, right? Know what you have. When it came down here, we weren't freaking out, Were we happy? Absolutely not. Were we a little stressed? Sure, but we knew what we had, right? We knew that they're not going to let these things get delisted. And even if they did come out and say they're going to be delisted, it's a 3-year process for that to happen. It's a 3 years of the company consistently refusing to provide its audited reports to the U.S. So there is some news. I don't know if CNBC is going to be the best place to find it, though. Okay, so we have Citi raising its forecast for China's GDP growth. That makes a ton of sense, right? They're starting to ease back a little bit on the restrictions, the zero COVID policy. Although they are in lockdown, it seems that they're doing that in like a shift work. So this group of people is going to be locked down. This group here doesn't make much sense, but it's a lot better than the entire country being locked down again. U.S. listed Chinese stocks. China regulator tells auditors to consider preparing for inspections. So that's actually a good thing, right? I think, the blessing is in disguise of China being so tough on their companies is that they can literally order them to comply with the U.S. Asia has seen a wave of buybacks. Goldman says these companies could be next. Well, we know Alibaba's buying back their shares, and if you don't think they were buying shares at 75, you're absolutely crazy. Domino's Pizza China operator files for Hong Kong listing. China's factories were hit harder this quarter than last year as COVID drags on. Yeah, don't doubt that. So this is really the one that I think, if you guys have some time, read this article, learn a little bit about it. Again, take it on the chin because everything that comes out has some bias to it. This is talking about HFCA, which is the Holding Foreign Companies Accountable Act. So yeah, I would just be careful of those, right? I know this is going to get some action tomorrow. Tesla's always volatile. When are these earnings? May 4th. Is that right? May 4th? Yeah. Yeah, so we see this big gap up in Tesla, and then it might come back down here and consolidate, and I say continue its run up to 120 or 1200. I think that makes a little bit of sense. Can you look at SPI? NASCAR all out. Can you look at SPI? Yeah. We'll look at SPI. What do they do? What's SPI? Energy. Yeah, I want to know why they were $2,000 at February 2016 and now they're $2. What's going on there, I wonder. Okay, it looks like 2 solar panels for residential installations. Yeah, let's look at the fundamentals, right? Because if it's $2 and it was $1,800, like something had to happen. Did they sell part of the business? Did they get rid of they list 1 million shares? Did they dilute? What happened? And the best place for that's going to be going to the balance sheet. Okay, so I see cash 4.2 million in 2016, 9.8 million in 2021. Total receivables down. Maybe, so they're not doing the same volume of business technically. Inventory up. Total liabilities 374. Okay, so they're solvent, right? Retained earnings, they are losing money. This is what we do when we look for these, by the way. We go into here. We want to know the fundamentals. We want to know the whole story, right? Because the fundamentals tell the picture. If it's just like a little pump up in the day trading stuff, which sometimes we'll try to stay away from, right? We don't always want to be in the day trading mode. We want to be in these good, long short management. That's how we like them. But if we can find plays like this, why not, right? But we want to know what's happening with the company. It's the same stock that ran from less than $1 to over 40 in a day. Yeah, that makes sense. Income statement. Okay, so revenues are more than they were in 2016. Less than they were in 20. There. Okay. Maybe they got short squeezed. That's a huge short squeeze though. We'll have to get more look at it for sure. Let's go back to our chart. And this is SPI. Yeah, I mean, I would just be careful, right? Like if we're going all in on these penny stocks, just realize that the inherent risk is a little bit greater. I don't know the full story. You might know more than I do. Anything in energy though, okay, so 2.5 days to cover, so not a lot of short interest, so I wouldn't expect any short squeeze to happen. Even if it did, it wouldn't be playing out like, like a big short number, right? Consolidation, but again, we have this support here at 2.8, so where's its resistance? 3.5. Earnings came out, that's why. Yeah, so you could get a run from 2.8 to 3.5. That's pretty reasonable if earnings are good, if earnings are solid. Then that's how that goes, right? Let's see, market close 3. How'd they do on earnings? Okay, so they missed earnings a ton, right? They missed it 64%. So I wouldn't expect a whole lot I would expect that in the pre-market, I would expect this to pull back a lot, right? I would expect it to go down. Spencer's at JMIA. What is this? Always get these ads at the worst time. Okay. Yeah, okay. Spencer, I see what you're saying. Anything above 10, I think, would be great to maybe 12. So a 20% pump would be nice. I like that. I remember someone asked about this a long time ago when we first started the group. And then Plug. I remember Plug. Plug, we bought it at like noon that one day, Spencer, and we woke up the next day, it just pumped again. Yeah, so this is all the lithium guys. Everyone's coming out. Everyone knows about lithium now. Again, is there room for these to go up? Yeah, a ton, but you got to make sure, are they making money, right? If they're not making money, once this euphoria of the unwinding of the massive short interest, or I would say just the massive selling that's happened in the stock market the past month, once that unwinds and once it's kind of finished, what are you left with? Well, it better be a solid company. It better be something that has some money, that's making money, that's keeping money. That's even more important. We'll just get a quick look. Okay, this is nice. Spencer, you might be onto something. 501 revenue, so total gross profit. Okay, they lost $99 on the top. So they're definitely losing money. Again, I don't think they're necessarily the strongest as far as company-wise. R&D expense. Okay, R&D is moving up. And it looks like about 3 times, but revenue is moving up massively as well. That's good. Net income, 460. Okay, so let's look here. Key stats a little bit easier for us. Revenue growth, 47% estimated for 2024. 2022, 82.37% estimated growth. That's nice. Gross profit margin, 14.35 from -0.8. That's good. EBITDA, don't care. EBIT, don't care. Net income, narrowing the gap, so that's nice. Total debt. Okay, so really, Spencer, the only thing I care about with these guys is, do they have money, and then how exposed are they on interest rate risk? Total term loans. This is going to be a better one. Okay. So this is all of their debt right here for fiscal year 2021. Anything in this one's going to be pumped up into here. So secure term loan. So they have no floating rates, which is nice. Sale of future revenues. So looks like that's how they're doing their leases. Is they're doing a revenue lease. Sell and lease back financings. Okay, operating lease. It's a finance lease. Debt related to United Hydrogen Group. Did they buy someone out? Is that what that is? 1.92.63. Spencer says, give me better advice. When do I close CLF? Bro, we got rid of CLF. We got in at like 18 and we sold it at 24. And it's like taking off. Ugh, sucks. Yeah, okay. I would just start peeling it back. Because once you have any run, I mean, that's 100% run, right? And if you were using leverage, it's even more than that. I would go ahead and just say, yeah, okay, it's been a great run. Good job. We did our job, CLF. Good to you, good to everyone. And I would just jump out, right? I didn't even look at the earnings. I really don't even know what they've done. They missed earnings. Like what? They missed earnings and they just did that massive pump. Coca-Cola. All right. Yeah, Coke just doesn't move, right? It's a low beta stock. It's a staple, and it just doesn't ever move. Slowly, when it does move, it makes these moves, and then it sits for 2 years, and then does its thing. 25 calls, the 25s. The 25 strikes? Okay. They probably weren't that much because the IV's so low, But you could definitely, if you get any good movement on it and hopefully it makes sense, you could exercise them. You did to just get a massive win on it and make sure that you're not paying over for the premium. How much are those right now? Let's see. I'm going to look on my phone, so I can't pull it up on the screen, but we'll see how much they are. And would you exercise? 20 May? Yeah. Yeah, okay, Spencer, you are a legend. You should go pro. So that makes sense, right? I like that. Coca-Cola loading up the dividend. I think it's important to have plays like this, right, in the portfolio, these strong, just hanging out plays. Something that's been in the news recently has been Uber, and it's not my favorite stock, to say the least, right? We've been talking about this in one of our groups, that Uber, they have a problem with getting into the taxi system, and they did actually address that. So we had been discussing it, and then now we see that they are in the taxi program. They're in the taxi system. Looks like they will be, looks like they'll be starting to list those things on their ads, which is great, right? Oops, you guys just saw my notifications. But that's great though, because now that they can get the extra revenue and get all that, but the problem is they've had all these great advances for years, and look at where the stock price is though, right? They're just continually and failing at capitalizing on anything good that they get. And I'm not saying it's a bad company. Everyone I know uses Uber, but what I think is most significant about it is we just really want to make sure that the companies we can make money long term. Now that being said, I think it might actually be a solid short play, right? We might want to take this down to the downside. I like it going from 36, this 36, 35 level down to 30, and we would just make them really small. Spencer hates Uber too. Fair enough. OYFT. We're definitely just going through all these right now. Lyft. Yeah, I mean, the same thing. It's competition. It'll take 20 years for them to start making money because they just compete. Amazon's probably going to have its own service by then and buy them both out. Dash. I think Dash is one that's actually maybe started to turn around a little bit. No, well, they keep missing earnings too, so they all suck. I just wouldn't buy these, right? If you guys get into these Discord groups and you get into these, we have one too, but you get into these Discord groups, these, I can make you $20 million, just follow this, and they're pumping stuff like DoorDash, like Uber, like Lyft, and they're not making any money. Stay away, guys. People spend more time looking at the car that they're going to buy. They do more research on that car than they do the stocks, the things that they could lose way more money on, right? So do your diligence. Is the company making money? If they are, how do they make it? Why are they making it? And then compare that over time. If they're not making money, simply just stay away, you know? That's how we look at these. Is there anything else? Oh, XBI. This is the one that I really like. Spencer, I'm surprised you're not in this yet. The whole fundamental, whole macro behind this one, right, is pretty simple. It works the same way as the technology that we mentioned in the beginning, okay? The same way. The idea is that the biotech companies, especially the ones in XBI, are a little bit of the smaller cap, the startups, right? They have a lot of debt, they have the new drugs, the new patents, and then you have the more mature guys like the Eli Lillys, the Pfizers, the Modernas, all the pharmaceutical companies. Becomes very expensive for them to do all the R&D, and they don't want to pay money to do R&D. It's actually cheaper for them to go out and to acquire a startup than it is for them to do all that work, right? So they'll pick up these small cap companies for like $1 billion, 500 million, whatever. They'll acquire them, add them to the portfolio, and because that stock's getting acquired, it goes up, and everyone's making money. So the idea, that's part of the underlying reason why we like biotech, is because this is the time for patent renewals. Okay, this is the time that companies' patents become for sale, they're up for lease, you know, whatever. So that's part of it. And the other part is it follows the same story as technology. Look at how abused this has been since basically 2021. Just bam, 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 just downwards, grind, downwards, grind. We're at the same point where it was, you know, 2018, really, some of 2019. So that's why we want to get into this, because as investors start seeking for alpha, and especially institutions, they pump into these things. They go into the biotechs, they go into the technologies. And if anything's trading at fair value, this is very easily 140, 160, right? Is it going to take probably the rest of the year? Maybe, but we know what we own, we know what's in there, we like the companies that are making it up, and we want to be in it. MRK has to be the top stock in that sector. Double my position for dividend shares. MRK, I think that's Merck, right? That's old. We talked about Merck this time last year. Yep, nice. Merck, I think you can play this one just by the charts. Okay, NASCAR All Out says low float IPOs have been running on day 2 this year, but X started to run the actual IPO the day before retracing all gains. It's a lithium stock. Yeah, IPOs sketch me out. You haven't realized we are mostly fundamentals with some of the technicals in there. Is this, I guess they just listed, that's what this looks like to me. Yeah, XPon. So yeah, I think anything with lithium could be pretty decent, you know? Anything with lithium, anything, you know, you got to make sure they're making money. And in that case, I don't think any of them are actually keeping the money that they're making. So you just find the ones that are the strongest, right? So I would look for things like, this is a good learning segment actually. I would look for things where you have the quick ratios, the current ratios. You want these to be as high as possible, right? It's basically just saying they have more assets and liabilities. This is all of them, and then quick is kind of more the shorter term assets and liabilities. Debt to equity, you want this to be low. This is actually plug. Altman Z-score measures, where was it? Altman Z, it's literally just here. Okay, Altman Z-score measures the chance of bankruptcy. The lower the score, the better. 8.87, I mean, you know, it is what it is. Anything under 3 is really good, anything above that, yeah. But I've seen some like 15s and 20s recently, so I would look at things, you know, are they keeping the money? Are they making retained earnings? Retained earnings is net income minus dividends. And we usually find it in the equity section, and they just roll over, they add to it each year. So they're continuing losing money. This is plug, by the way. All right, yeah, plug. Continually losing money, but I think they've also done a good job with their liabilities, right? What's up, guys? If you're new here, we're actually just going through right now, looking at some of the, some tips, some metrics in the balance sheet to figure out if it's a good company or not. If you guys have some tickers or some stocks you want to look at, just throw them in the chat. That's awesome. We've looked at like 5 or 6. So I see some new people have been joining, which is great. So yeah, inventory. Yeah, so their inventory build, and then what's the accounts receivables? The accounts receivables are going up too. That's nice. So possible demand. Now again, we're looking at this, we're just making inferences. These could be completely wrong, but just based off of trends and what we know about financial statements, it could be pretty great. Ness Carlisle says, I actually look for IPOs with poor balance sheets. They are stealth IPOs where nobody in their right mind would want to buy up the company. Yeah, that can be a good thing if you want to corner the market and run it. I agree. Yeah. What are some other ones? What are some pretty poor balance sheet IPOs? Or I guess near IPOs? If you guys want to laugh, we can look at Peloton. Let's see. Liabilities, yeah, so accounts payable. I mean, why is that so high, right? Why are their accounts payable jumping from 364 to 1,099? That's insane. Retained earnings, continual losses, additional paid-in capital. Just why though? So they're not seeing the return on the investment. 310 calls for leakage, which would break the downtrend. Which one is that, Spencer? 310. Yeah, like this is insane, guys. Like total enterprise value to total revenue, 16.12. So I'm just looking at valuation right now between these, from these stocks that were really, really big in the pandemic to right now. This is Peloton. I hate to pick on them, but just always know what you own. Total enterprise this is basically just saying, net worth of the company minus assets to their revenue. It's 16.12 to 2.12. 8.72 to 2.34 PE, 255 times PE to now they don't even make money, right? This is what I'm saying. Know what you own. Price to cash flow per share. Now they don't even have cash flow. I would always look for that, right? I would always want to know those things. $310 calls. Peloton has 310 calls at Spencer. Let's see. And then Ness called out WNW back in December 2020. I'd say it is the first stealth IPO, some Chinese low float company. Yeah, that's insane. That those companies can do that, isn't it? They can just run up like that. Now, this is an ADR. They actually cross-listed. I'm going to look at the tear sheet. We'll jump into it in a second, but I just want to check it out. Wunong Net Technology, retail food products in China. Interesting. $19.6 million market cap. Give me 1 second. We're going to look at revenues to price change. Look at quarter. That's insane. Yeah, so revenue is really high right there with the IPO at 125. And how many shares did they issue? That's the other thing too. So now we're going to go to capital or capitalization. I want to see how many shares they have. What did they issue? 25 million shares. Yeah. Oh, Spencer says Home Depot 310. 310 weekly is 15% dividend increase. Fibonacci retracement 286. Strong report and bounce off 300 psych. Yeah, Home Depot's the one, like, I can't ever pull the trigger on it. I just feel like, I don't know, like, I just can't. It's something about it, is I just feel like it's run up so much, and I look at it a week later and it keeps running, you know? Granted, I haven't looked at it since December, but still, nonetheless. Maybe now is the time to get in. What are some fundamentals behind it, other than just dividends, Spencer? You know, are we going to see growth? Are we going to see earnings? Are we going to see new services for customers, subscription models, like, you know, anything out of the box like that? What's going to push this thing higher other than a dividend? Because dividends may become less attractive as rates move up, you know? All right, so we're looking at Home Depot, looking at the chart. Yeah, I see what you mean. This 317 level, 310, and what are we at, 308 right now? 301. Okay. So let's look at the key stats, see what we got. Key stats. All right. Look at this growth for Home. This is, what is this? No, we want Home Depot. Yeah, I don't know why they just glitched like that. Okay, so go back. Key stats. All right. That's pretty impressive growth, though. 65%, 67% from 2018 to 20, or what am we looking at here? 2022, 51%. That's pretty nice. Okay, so it looks like we're going to be in fiscal year 23. Margin, EBITDA, I don't really look at EBITDA that much. Gross margin, 33. Okay, this is showing to me pricing power, right? The fact that they can keep making money is one thing, but the fact that the gross margin can literally only drop like 40 basis points, that's impressive, right? And what do I mean by that? Well, I mean that it's dropping 40 basis points in the face of inflation. So they actually have pricing power. You know, people are still going to Home Depot. They're still doing their thing. We know this because people are buying houses, all that stuff, right? This is what pricing power looks like, guys. Net income. And this is even better. The fact that they're in inflation, margin is doing well, net income increasing. That's good. Always look at the income statement first. I don't know why. It's just what I do. Yeah, so we know the revenue story, cost of goods sold, always about a third of the business. So, sorry, 2/3 of the business. But it is retail, you know, so selling good. Looks like that's keeping it proportionately. Operating income. Yeah, so we know that. We know gross profit, operating income, depreciation, amortization. What did they take on that depreciation is up more than in 2017? Is this like extra buildings, extra equipment? What could that be? Because the higher that this goes and there's no like underlying change, means that they're going to start buying more stuff soon, more capex, right? So it looks like a bigger write-off at the end of the day, but in reality it's not. They had to go back and replace it. Net income, again, we know the net income stuff. Basic EPS, EBITDA. Let's see what we got. Balance sheet. Always look at the retainer. I mean, I look at the ratios, the liquidity ratios, but yeah, I mean, slightly insolvent. No one really cares though, right? And we add back this treasury stock, you know. If we add back the treasury stock, we have more equity than liabilities. So just remember that, right? What happens is what companies will do is to get this return on equity margin, the best number they can get, is they will severely, well, it's not really so much what the companies do, but just the way it's analyzed, it's as a form of legal manipulation, is they'll keep this treasury stock as a negative number, and as they do their ROE equation, it actually boosts up the return on equity because it is negative, right? Just something to keep effective. So it actually says here they have 1,696 total common equity negative. It's actually about 74,000 or so. So let's see. Okay, look at the ratios. Net debt to EBITDA, that's nice. Asset turnover. Okay. So it looks like they sell all their inventory 5 times a year, right? So they sell it, buy, resell it, buy, sell it, buy. And that's been staying pretty steady. It's pretty steady, which is good. We don't have a debt to equity number because you have technically negative equity. Altman Z score 7.39. Again, relative though to the, that is quite relative to the company and the comps. Quick comps, what do we got? Lowe's, we got Lowe's at, so some of the companies are going to be like your Lowe's, going to be your Floor & Decor, Tractor Supply, those guys, shares outstanding, debt to equity, they'll have pretty high debt to equity. What's this Kingfisher? Can we get in on that? Might be an idea. Really low debt to equity. Low net debt to EBITDA. Low, this is price to sales, actually market cap to forward total revenues. EPS 9.17. Yeah, what's this? Let's look at that later. Spencer says looking at when, Y, and N. So you guys kind of see just what I look at. You know, I look at very quick glances of these companies. If I see anything that if they're out, if they look great compared to the rest of the comps, you know, we start looking at it. If it looks about the same, pretty normal, you know, there's so many, we might put it on the list and come back to it. We think the story's there, but sometimes it's not. 24 times net debt EBITDA. Yikes. I mean, it's because they haven't made any money, though. I know that. Okay, I would compare it to this, right? MGM Resorts, when net debt to EBITDA, so it's just basically saying what's the debt to what the earnings of the company. I don't believe 24 to 29 times is the standard for those companies, because I know that they're primarily, you know, they have some good China operations. MGM, those at 7.8, I think that'd be a fair comp. Boyd Gaming, maybe. Marriott, maybe, might be a good one. Red Rock Resorts, maybe. Hilton. So what I would want to do is I want to come over here back to my ratios, and I want to see what's the long term on these guys. What were they doing net debt to EBITDA beforehand? 7.9, right? See, so it's just because they're not making money. And how do we verify they're not making money? Well, we come over here to the income statement, and I can see in 2021 they're making barely half of what they made in 2019, or the year before that, and year before that. So that's what I want to know, right? Do they have pricing power? Not in this environment. Look at that. Gross margin cut in 2021, it did better, but gross margin cut in half for this year. What's the story behind that? So now we got to know all the stories, right? We want to know these things. So I think that's it, guys. That's a pretty good place to stop, I think. We talked about Wynn, Tesla, some of these, WNW. Let's see, what was the other one we talked about? SPI, and then IVDA. So yeah, guys, that was pretty good. We talked about an hour about all these things. I know it was a long. Thanks for hanging out. Thanks, Spencer, for calling out some cool things. Definitely, everyone keep an eye on. He's going to keep posted. IVDA was a pretty good one, I think, to check out. So we'll look at that in the morning. Spencer says Wynn is selling their online sports book. Wonder if that's the best move. You know, that'll be apparent in the next couple of weeks, I think, for sure. So, yeah, guys, thanks for hanging out. If you're not already a member of the Discord, please check out the link below. Be sure to like, subscribe, do all that stuff. It really helps the channel grow. And we'll be back at the same time next week at 7:30 to do some more stocks. So have a good week, guys.